Hello, and welcome back to the conversation. My name is Michael Barnett, your host, and I'm joined today by Michael Balzer. Michael, welcome to the podcast.
Michael, thank you very much for having me.
Absolutely. We're very, very excited to have Michael on the podcast today. Michael, at least I consider Michael a payments visionary. This is an individual that has been through multiple organizations at high levels of these organizations. It's been a key decision maker and an individual that has shaped parts of the payments industry. I thought it would be amazing to have someone like Michael on the podcast today to share his knowledge, to share where things were, where things are today, and the future of payments. So welcome to the podcast, Mr. Michael Balzer.
Thanks.
So Mike, can you tell us just a little bit about yourself, a little bit about your past and history, and I guess we'll take it from there.
Okay, excellent. Well, thank you. Yeah, I'm in the payments industry probably for around 20 years now, so way too long potentially, but started off working for a payment gateway and then really moved into value-added services. For a couple of years, I had my own company based out of Atlanta, which again was very much focused on payments in North America for sports venues and retail. And then after that, I basically sold the business successfully, moved out of the company that took us over or acquired the company, and worked for a payment device manufacturer for the last 3 years. And I'm now starting my own business again, basically in 2025, still in payments, but I've been around multiple aspects of payments. And I think that's the interesting aspect if you look at it from all the different angles, see where it was 20 years ago when nobody wanted to be in payment. Now, 20 years later, it's one of the hottest industry segments that you can be in. So it's quite a ride, but I'm enjoying it, and it's good to be here.
Yeah. 20 years ago, payments wasn't nearly as cool as it is today with a lot of the new technologies that have been invented and that are now popular. I'm sure that's made a huge impact on the payments industry.
Absolutely.
So some of the things that we're going to talk about today is we're going to talk about the transformation of the payments industry. And so that's something that I think is really important and ties back to a point we just made. 20 years ago, payments wasn't cool. No. Today, payments is cool, right? It's really cool, actually. Yes. We'll talk about overcoming some challenges in a rapidly changing landscape, because with technologies, new technologies, and now the newest technology, which may not be affecting payments yet, but AI, right? That's like the buzzword I think that no one can escape these days. What that just means is things are changing so fast. And how do you kind of keep up? How do you keep a consistent vision without just jumping to the next cool buzzword, right? Yeah. So we'll talk about the overcoming challenges in a rapidly changing landscape. We'll also jump in to the consumer's role in shaping the future, because consumers may not realize it, but they do have a role in what companies invest in, the new technologies that companies adopt, and what actually is brought to the forefront. So we'll talk a little bit about those things as well. So really super excited to dig in with you, Michael.
Fantastic. Good.
So let's jump in. Let's talk a little bit about the transformation of the payments industry from your vantage point. Yeah. Me personally, I could talk about the vantage point of a consumer because I am a consumer and I really am a consumer. So I can speak about that, but you could really speak about the inner workings of payments and where things were and kind of where things have gone and are heading.
No, absolutely. And I think we're all consumers. That's a good thing, right? When it comes to payments, we're sitting here talking about the industry as such, but on the other hand, we're also consumers and we have our own expectations. But if you look at payments, and for many years, it was really around accepting payments, cost optimization, and innovation was related to chips on credit cards and contactless payments and so on. So that was basically where we're coming from. But what you've seen over the last couple of years is that really the consumer behavior is changing. And the consumer behavior is also something that basically drives where payments are evolving to, from a utility of basically, yes, I want to make a payment, to an innovation space. Because the consumers today, cards are still playing a role. but they end up being in a wallet on a mobile phone. And consumers are looking at, if I can pay online for e-commerce with a certain payment method, but I go into a store, why can't I pay with the same payment method?
Right.
So these are the kind of things where the consumer is saying, I don't get it. It's so easy on e-commerce or online. Why is it so hard on the offline or the in-store space? And I think this is where a lot of the developments and the innovation is coming from, because all these trends require the payments provider to think how they service their merchants. What do I do for my merchant in order for the merchant to satisfy the consumer? And I think this is really the key aspect where payments are today. It's not just a utility anymore. There is more, because the consumer wants things differently and they're expecting things differently. And this is where everybody now needs to really align.
Makes sense. I mean, how would you think that, how do you think that technology, the new technologies have, I guess, changed the game for the industry and potentially even the retailers that are adopting these technologies? And a cool story that I'll tell really quickly before you go deep into that one. So I was in Whole Foods. It's probably like, I don't know, maybe less than a year ago. It's probably like 10 months ago. I was in Whole Foods and I was checking out. And usually, like now, I'm using my iPhone, right, the contactless payment with the wallet app. I just tap it, bam, and I check out. But there was a person like in helping people with the self-checkout. And he was like, oh, are you Amazon Prime? I'm like, yeah, I'm Amazon Prime. And he's like, okay, well, you can use a new payments device that we have, and you just wave your palm over the device and it reads the palm. And I almost lost it.
Yeah.
I'm like, whoa. Number one, you're going to have my palm in the system. And number two, you can read my palm and it will choose my primary payment method. That scared me. And we'll talk about like security and all that stuff in a little bit, but that really made me, it was cool at one point because I'm a technology buff and I'm really into technology and new emerging technologies. But secondly, like super scary, cool at the same time that they were experimenting with that. So I just want to tell that story before we go into how technology has unlocked new opportunities and changed the game. I mean, we can probably answer that pretty easily.
Well, we can, and it's an interesting story what you just said, because, and I know we touch upon it later when we talk about trust and convenience, but I think what has really changed from a technology perspective are two aspects. One is cloud technology, because things that had to be on technology in an in-store environment can now sit in the cloud. That changed a lot of trends over the last couple of years. The other one is open operating systems. If you look at the payment devices that are in store, they were pretty much locked down by the manufacturers and the operators for many years. Suddenly, you move into Android as an open operating system. That opens a lot of opportunities for people to do more with the devices that are there. It can be good, it can be bad. I mean, at the end of the day, it's an opportunity. And I think this is basically where it changed from proprietary systems to open technology and to cloud-based technology. And you don't have to basically do everything on a lockdown solution anymore. I think these are the two primary things that have changed over the last couple of years. And with that, innovation came. What you just described at Whole Foods, that wouldn't be possible without basically anything running in the cloud or communicating with basically the back end of Amazon in order to pick up your preferred payment method that you have in Prime. I mean, these kind of things were not possible when everything was locked down on premises in a tied up box that couldn't do anything like that. And I think
makes sense.
Main aspects of what have changed really.
Okay. So open systems. And I guess that's something that most people wouldn't think about, but cloud computing is where we are today. And thank Amazon Web Services and thank Google Cloud and thank Microsoft Azure. Those are the big three that we think about when we think about cloud. There's other companies as well who are competing in that market, but those are the big ones who have made it possible for a lot of this innovation because of cloud computing.
Yeah.
But the secondarily is open systems. And what is your What is your assessment of why systems have become open where previously they were more closed systems that didn't allow, the innovation that we're seeing today?
Yeah, I think a lot has, again, to do with what the consumer wants and where the consumer is coming from, right? If you look at payments, as I said before, the consumer was doing certain things on e-commerce where everything was cloud-based and open, right? And now they want to do similar things in an in-store environment. Yeah. So I think the need was there, and people also saw that to develop on the actual technology that's in store in a proprietary environment is just very costly. And specifically when you want to add value, right, it's very hard. And then we'll talk later about basically existing providers versus new market entries. What are the benefits? What are the disadvantages? But if the systems are locked down, it's so much more expensive to work with this and to do innovation. I think this is where a lot of the aspects are coming from. Say, move it into the cloud, move it to open technology, because it'll save money and it will increase the speed to market, or it will reduce the speed to market.
Speed to market. So I think there's the benefits to the consumer. Open systems creates innovation, a lot of benefits to the consumer. But then you have the other side. You have and we also get into more of this later, but the incumbents, so the bigger companies who are more established, who, we won't mention brands here, but the big payment brands in the industry that now are faced with, we're now evolving to more open systems where maybe the models are less proprietary, which then opens the door for more innovation, which then challenges the market position of some of these bigger companies. I think technology has definitely, caused some fear, right?
No, it's good.
In some of these bigger companies. But how do you feel as though, or what do you think the impact is of now that the systems are more open? There are now more startups creating new payments technologies now that are challenging some of those traditional players.
Yeah. No, but I think, listen, for us as a consumer, it's great, right? But if you're an existing player, it's a real challenge, because the existing players, and I go back like 10, 15 years, there were significantly more players in the market than there are today. If you look at purely existing payment providers, a lot of these have merged and got acquired over time. And here's the real challenge, because you have a lot of these large payment players in the US. They did mergers and acquisitions. They put platforms together, existing platforms that were all based on older technologies. And now they're trying to make sense out of everything that they bought from infrastructure perspective, from a software perspective. And that is hard. And that is hard to actually combine it and get something state of the art up and running. On the other hand, you have players that were probably in e-commerce, and they are now moving into an in-store environment and say, well, I have a central infrastructure, which is cloud-based. I have reporting tools. I have dashboards. I mean, for me, it's much easier to work with one single platform, because this is where I'm coming from, right? So you have startups that use the latest technology. They can really build it from scratch. They have no legacy. And then you have the existing players who have a lot of legacy, because they also acquired a lot of legacy, need to put this all together and keep up with these startups that come with basically a blank sheet of paper into the market and say, I can do as much innovation and as quick as I want to do it, because I've got the foundation. So it is really difficult for the existing players. The benefit is the existing players have a lot of trust with merchants. They have a lot of trust with consumers because they're around and the brands are familiar. Then you have newer brands and new market entries that nobody knows. So how does that balance off, and where do the merchants then decide where they want to go? But it's a very interesting playing field, because the entry barriers today to move into payments are significantly lower than they were 10 years ago.
Absolutely. Thanks to the open systems, open APIs and technologies, these platforms that have been built that make it so anybody can build on top of our payment rails, right? So there's companies that are offering payment rails, and you can build on top of those payment rails whatever you want.
Exactly, the API-driven integrate. I mean, that's the key thing. And this comes a lot from these new players that come from the e-commerce side, where everything was API-driven, right? And then moving into an in-store environment saying, yep, I'll have the same API, right? And then the existing players are looking at saying, how do I counter this? How do I basically get into a similar position? And that's not that easy.
Okay. All technical stuff. Let's kind of take a little step back and talk about the consumers.
Yeah.
So non-technical stuff. So consumers, although we're all consumers and we don't necessarily think about how our behavior shapes what companies build and deliver to us. And at Lone Spark, this is on our website, on our About Us page, we list our action-oriented behaviors. So essentially, these are the points that drive what we do within the company and how we do what we do. And point number one, or our number one action-oriented behavior at Lone Spark, is start with customers, which means anything that we do, we're doing it because of the customer's demand, request, customer's behavior, which is demanding that we do something for them differently, better, cheaper, faster, whatever it might be. And so I know that over the last 15 to 20 years, there has been a big push to like agile working, agile development processes that are much more influenced by customers in making quick and tested decisions based upon customers' feedback. And so if you're a product manager, product developer who has been, raised within the last 10 to 15 years in any major university, specifically in the US, that has kind of been your focus. Yeah. Your focus is product development based on customer feedback, based on a customer's story, what the customer wants. Consumers probably don't know that, right? Companies want to give you or give consumers what they want. Yeah. So with that all said, let's talk about customer-driven innovation, and wanted to sort of dive into how consumer behavior and their expectations are driving innovation in payments. Can you talk a little bit about that?
No, absolutely. Now, I'll give you an example. 5 years ago, I was in China on holiday and basically went to a food court there in one of these malls. And as a tourist, you had no chance to pay with your credit card, right? As a foreigner, it was either cash or you need to have a WeChat Pay or an Alipay.
WeChat.
Right?
WePay.
So at the end of the day, the consumers over time had decided this is how we want to pay. We want to pay with QR codes. And based on that, the whole technology has shifted. And as a foreigner there, as a tourist, you're standing there and saying, okay, what do I do? Right. So suddenly you have to go back to cash, which is really where you do not want
download WeChat is what you do in Star Alipay, right?
And I think this trend is something that you also see coming in other regions of the world, right? If you look at Pix in Brazil, which is a very prominent QR code payment type, now moving into North America to focus on regions where Brazilians are going to spend their vacation, right? So these are very interesting trends, and I think the consumers are, as you say, not aware of the impact that their behavior has, that basically now the technology is following the consumers. Where are they going? Where do I need to be, right? On top of that, the key is still for any retailer or merchant is that they do not want to lose a sale. If you have a consumer in front of you and they want to pay for goods, you want to make sure that you can satisfy or meet the need of that consumer. You do not want to turn around saying, well, I would love to sell you something, but I'm not accepting the way that you want to pay. So what do we do, right? And I think these are kind of trends where the consumer behavior is really driving that innovation needs to happen and that the merchants need to adjust and adopt new technologies in order to be more flexible. And this is not a theory anymore where people are saying, this is what will happen in 2027 or 20. It's basically happening today. And it's, again, all driven from consumers being in an online environment on e-commerce, very familiar to pay in whatever way that they want to pay, like what you said about Amazon Prime, and now going into a store and saying, well, great, why can't I do it here? So I think this is where the consumer behavior is really already changing the way that merchant needs to think about their technology piece. And again, it's not something that will only happen down the road. It's happening as we speak.
Yeah, I think what has been shown is that consumers want easy but secure. We'll talk about secure in a moment. Easy and secure. And I think that's also been tested in other markets. For example, you said China. China is probably the most advanced market as it relates to payments. And that's coming from me. I'm not a payments expert. And I don't think I'd be going out on a limb making that statement. But would you agree with that statement that China's probably one of the most advanced markets as it relates to payments?
I think that they just looked at the consumer behavior very early on and then built the infrastructure around the consumer behavior. Because if you look at where WeChat is coming from, it's basically a messaging app originally. It's not a payment method. It's not a super app. It developed over time, but they saw that this is where the consumers are spending time on this application. I want to add more and more and more to it. And I think let's look at it. The same will potentially happen with other apps that are out there in North America or in Europe or in the Middle East. But yes, China was much faster in doing this and realizing this and other regions. But you see that this is now hitting other regions as well. So we are a little bit behind in some of the regions. And again, you can always see that the wave starting somewhere and then it'll take a couple of years before it hits somewhere else, whether it was EMV or whether it was contactless. It's always the same kind of cycle. But yes, you're right. I mean, China is advanced when it comes to that.
How far are we away from like microchip under the wrist and wherever you go, it just knows who you are. It knows your primary payment method and it everything sort of just syncs. How far are we away from that?
Well, again, now we're talking about trust, convenience.
Yes.
This is the question then, how much trust do you put into that chip that is implanted, right? Technically possible, it is, but is a consumer ready for that already? As a consumer, I'm not ready for that, I can tell you this.
Yeah, I'm not ready for that just yet either, because I definitely fall into the camp of not so trusting, but have become more trusting due to increased repetitions with the latest technology.
Yeah.
So let's transition and start to talk about trust, because I think you would agree that that's probably one of the reasons why technology hasn't advanced as quickly as it probably could. I think the technologies are there to take us much further, much faster, but likely trust and security prevent that from happening, because I think humans are inherently not trusting when it comes to financial information, and we probably shouldn't.
Yeah. I think there are two aspects of it. One, if you're a provider that wants to move into the payment space, there are very clear rules of how you need to basically work within the payments environment. When it comes to security and so on, there are rules that you need to follow. And I think you're not getting into payments as a provider when you're not willing to follow these rules, right? Which is fine. But now, let's say the rules are there and you have technology that can work within the rules. Now, the other thing is you have a merchant who is working with one of these existing players for 10, 15 years, and you know that it always worked, right? You got your money into the bank account, and now there is this new startup, the disruptor, coming around the corner and saying, I can do the same, I can offer you more, I can make it cheaper, it looks better, the dashboards are better, the reporting is better. Mm-hmm. What do I do, right? Is it really worth for me to save 10 basis points, but putting my business into the hands of somebody that I don't know? Or do I stay with the incumbent and wait for them to upgrade the technology? And I think over the last 5 years, we've seen that merchants are increasingly trusting players that came into the business and are growing significantly now, they're building up the trust, right? There are a couple of companies, whether it's on the West Coast in the US or whether it's in Europe, and then they came into North America. They were new brand names 5 years ago, but they're not new brand names anymore. So they are now also household names in the industry that people say, okay, they are not basically, they weren't just here for 2 months, they're here for 5 years. I can start trusting them. And this is where they're picking up more business. But it takes time. It basically takes time for the merchant to see these are real players. These are not just companies that pop out of the ground and then disappear with my money. So I can understand it from a merchant perspective. You're not just changing every year and hope that you can save a couple of basis points here, right? But I think this is where it just takes time for these newer players to build a reputation. But once a brand has a reputation, the merchants are willing to start considering the other players and then also making a move. This is basically the trust that needs to be built over a period of time. And I think this is not going away in payments.
I think so either. What type of connection do you think there is between the amount of time that a new technology has been released or has been available on the market versus like a consumer's likelihood of adopting that technology? I'll give you a specific example. Going back to my Amazon example, there's people who are in Whole Foods now using this new technology, right? The whole palm reading thing. I actually think I was a little late to the game because I don't generally go to the market. I order my groceries and have them delivered. I use an app. So I adopt some technologies very rapidly. Other technologies I'm going to be a little bit more skeptical of. The ones that are reading my personal or biometric data. I'm concerned a little skeptical there. But there are consumers who were using this technology and have been using it before I even noticed that it was available. And I'm certain that over time, as more people become more comfortable seeing it there, ask questions, try it, test it, and use it a few times, it now just becomes second nature and commonplace. You just inherently begin to trust something that's been around for a while or that you've seen for a while.
Yeah.
Or maybe you've seen others using it and haven't heard any bad news on the news. The Amazon palm reader is now, it's taking your blood pressure, right? And it's causing cancer, right? As long as you don't see those headlines and we get used to something, I feel like consumers just inherently become more comfortable with what do you think?
No, absolutely. And I think the other example, I obviously live in Germany. I mean, contactless payments in Germany was really not working out. People didn't want to do it. And then we had the pandemic and suddenly nobody wanted to have your card anymore. They wanted you to basically pay contactless. And this was a massive shift because people suddenly had to do it. And now contactless is just something that people do, right? So sometimes it takes a certain situation to drive a trend. But I think the other aspect is that if you look at the differences between the generations, right? Whether it's my parents or my generation or my kids, very different behavior and very different issues with trust as well. Because, I mean, if I look at my kids, they just preferably, they want to have an app that they can open, that they can order something, that they can pay, that they get it delivered, or that they can pick up somewhere in store. They want to get their loyalty points. They want to get promotions. They want to have it all in one place, right? Then, whereas I probably act a little bit different because, of the way that I operate, my age, and all of that, right? But I think this is when you look at the next 5 to 10 years, a lot will come from what the consumers and what the different generations are familiar with and what they really want to do. And I think you see the adoption then when people start using it more and more. But I believe that the time for adoption will shorten the younger the people are, because my kids are adopting technology much faster than probably my generation was adopting.
And I think that actually hammers home the point that I just mentioned. When you're born with a device in your hand, and that device is used for payments, that device is used for communication and emails and all the things that it becomes a way of life. you become generally more trusting because that's just what you're used to.
Correct. Yeah.
That's what I see. So I'm supposed to pay by doing tap, right? I'm supposed to pay by putting my palm on the device or reading my eyeballs or chip under my arm or my wrist or whatever it is. It just becomes second nature because that's just what it is.
Correct.
So
yeah, absolutely.
Opinion. What would you think, or what is your opinion of what future payment technologies that we may see or experience? And you can't say reading palms because we already hammered that home. You can't say reading palms. What would you think as someone who's been in the business for a while and who's worked at hardware manufacturers, some of the biggest in the world, by the way? What would you think that are some of the things that we could expect to see in the future?
I think, then again, let's look at Asia, right? Biometrics is a big thing. You're saying palm reading. In China, face recognition is something that you have at vending machines and stuff like that. So this is already happening, right? But I think on the other hand, it's also the regions around the world will have very different innovations coming, right? Not every innovation will be an innovation that sits across the board. But I think biometrics is going to be definitely one of the topics. I think value-added services and to do more with the payment technology that's available rather than just making payments. And this is where you come into the picture, obviously, with LoanSpark as well, right? Talking with a merchant, making promotions, making offers, building a relationship with a consumer through payment technology, through loyalty, through apps. I think this is really where things are going. You can say, is it going to be biometrics? Is it going to be facial recognition? Is this really where the trend? I think these are all like side products, right? But I think the key for a merchant is to be close to the consumer and to know more about the consumer, to interact with the consumer, and everything that helps that relationship, I think will definitely promote and push innovation, right? If you look at food and beverage, when you're in a hotel and you have food and beverage outlets in the hotels, you always talk about walk-ins, people that walk into the hotel and eat there. And I think if you look at retail, the biggest frustration today is not the walk-ins, but it's the walk-outs. Basically, you have a consumer come in, they're walking out of the retail store and you don't know who it was, what are, how to communicate with them. And I think that the innovation and the trends will really focus on this aspect of the merchant-consumer relationship, how all these providers in the payment space can help the merchant do better business and bring them closer to the consumers so that they can start interacting and engaging to, again, drive more business. And I think this is probably where I believe that over the next couple of years, there will be most of the innovation and the activities will go down that path.
Super exciting industry to be a part of. A lot happening in payments. And it's really neat that, as we discussed in our opening, where 20 years ago, or even prior, it was considered more of, I don't want to say boring, but more of like a boring sort of just consistent, slow growing industry as it related to technology. And with now the change in cloud computing, processing, open systems, open data systems, APIs becoming more prolific, there's an explosion in payments, an industry that is super exciting. It's hot right now. So, hey, I'm glad that you're able to come and share a lot of that with me and with those who are listening to the Conversations podcast. So I appreciate you being here, Michael. It took us a while to put this together.
Really, thank you so much.
Yeah, glad that we were able to make it happen, and would love to have you on again. Potentially next year, and super excited about our partnership as well. Super excited to see where we're able to take things.
Let's tell the world and prove to the world that we know what we're doing.
Exactly. Awesome. Well, Michael, that's it for the session. That's it for the podcast. Thank you very much again for coming, and we'll do it again.
Fantastic. Thank you, Michael.